my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. An indecisive doji cross yesterday. For a second day, it seems the market seems to be thinking that it has done enough on the downside. We're still in a fairly free zone between the overhead congestion band 104.92 to 104.51, which has both the February and March lows at the same 104.92 level and as a key level, and another congestion zone below between 103.69 to 103.38. This zone has the December 2016 low at 103.49, as well as the January 2017 low at 103.38. Overall, we are still in between the middle time above, currently 106.35, and the lower time below, currently 102.65, of this amazing January to May 2021 bearish Andrews pitchfork. This pitchfork is amazing. It's run the bearish market now for a year. So far today, a reactionary move back up almost through the overhead congestion band 104.92 to 104.51. Beyond that, we have the April 2017 high at 105.68. Cable, aka sterling against the US dollar. A fifth bearish black crow yesterday and a second significant close below the May 2020 low at 102.73. The reason this is significant is that there is limited support below here until the October flash crash low from 2016 at 114.48. The only notable area under the market is some light support between 118 even to 114.5, dating from March 2020. This now brings to the fore a question I've been privately pondering. Has the action since late April today been a possible double bottom or a bearish halfway hesitation? Well, it looks at the moment with these two consecutive closes under the May 2020 low that it may well be a big bearish halfway hesitation. It's early yet, but there is enough to give an initial target in the 117.5 target X in the 117.5 area if this pattern develops. Now, so far today, a reactionary move back up over the May 2020 low, and currently looking like a bullish harami, if just. Will it be enough to counter the first pangs of a bearish halfway hesitation? That is the question. Euro sterling. Second bullish white soldier yesterday, as well as a bullish long white Mariposa, more than a suitable follow-on higher to the previous session's counter to the counter bullish double and bullish harami. Prior to yesterday, we still had the following targets on the upside for the smaller lopsided diamond pattern, with a primary target X in the 86.80 area and a harder to get secondary target X1 in the 87.65 area. And for the extended diamond pattern with a primary target X2 in the 87.15 area and a harder to get secondary target X3 in the 88 even area. Okay. Of those two diamond patterns, both target X in the 86.80 area and target X2 in the 87.50 area, the primary targets for the original lopsided diamond pattern and extended diamond bottom, respectively, have been reached. There are now two additional items. There is the big one, which this market has previously triggered but then sent mixed messages on. I've spoken for months now of the very large falling wedge pattern, currently 84.56 to 81.42. This pattern is still in operation but has fallen into the shadows a little with the rising prominence of the diamond patterns. And though triggered, it still leaves us with some serious questions. You see, it has the most ambitious upside target of all, target X4, for this pattern's in the 88.65 area, and that is a really big ask. More recently, I've noticed a neckline, or noted a neckline currently at 85.64 of the December 21 to May 22 reverse head and shoulders pattern. This is the extension of the rising upper trend line of the original extended diamond pattern. Now, primary target X5 for this would be in the 87.75 area, and the secondary target X6 would be in the 88.60 area, which is very close to that maximum target for the wedge pattern. Targets X4 and X6 are currently just off the top of my daily chart. Now, so far today, an extension higher up to the April 21 high at 87.19, which the market failed to reach yesterday. Then a fall to the April 2020 low at 86.69 before just puncturing it. There's not really that much now down until we go down to the 86 sort of 15 area. But it'd be interesting to see. There is a high from 86.20 area back in May, but we'll see how that develops. US dollar against the Indian rupee. Small bearish opening Black Mariposa yesterday after the previous session's indecisive spinning top. Below we have the interesting recent congestion at 77.89 as well as the broken lower trend line of the recent ascending triangle at 77.87. And the breached a formidable lower time currently at 77.75 of the mid-January to mid-April bullish Andrews pitchfork. The market is seemingly now resting on top of the recent congestion zone between 77.40 and 77.80 that we've seen for most of the past few weeks. Meanwhile, overhead is the old target X in the 78.30 area, which was the target for the whole of the 2022 action, being a ragged bullish halfway hesitation. It was reached this past Monday. Now, so far today, well, not much. The market is looking like it is trying to have a little go on the upside after looking like an indecisive top, spinning top. But it's a very tenuous and gradual move higher. US dollar against the Brazilian real. Slightly higher, yet still indecisive doji cross yesterday. It was the second consecutive close now over the Fibonacci congestion of 505.73, 507.39 and 510.87. It was also the second clear consecutive close over all of the following. The 50% Fibonacci line of the October 2019 to May 20 move at 496.58. The declining medium moving average currently 496.52. And the upper tine, currently at 494.71 of the interesting but still in the early development January to May bearish Andrews pitchfork. This last pitchfork is now no longer viable and will be retired after this commentary. I suspect the reason that prices seemingly stumbled yesterday in any attempt higher was due to resistance overhead of the middle time, currently at 515.5 of the newly drawn April to late June bullish Andrews pitchfork. This is the first contrary bullish Andrews pitchfork I've drawn for quite some time. Above the middle time, we now have resistances at 519.41 and 520.27, then the high for May at 520.95. Now just above these, we have some significant resistance. They are the 50% Fibonacci line of the March 21, April 2022 move at 522.76, and then the flatlining long moving average currently at 525.23. It's worth remembering that the recent high here only managed to get up as far as 520.95, but then again, I should point out this move is starting from a higher base. Indeed, we could look at the action since the start of April as a possible bullish halfway hesitation, if not a perfect one of those. This would have a limited target X on the upside in the 528.45 area, but I'm not altogether sure on this one, not yet. US dollar against the Mexican peso. A bullish white Mariposa and fourth bullish white soldier as well. It was a continuing superb follow-on higher to the recent interesting and somewhat out of the blue key reversal up and the earlier shooting star pattern type 2 bullish. This time the market used the base of the long moving average, currently at 20.41.15, to punch up and close over the neckline, currently 20.54.05, of the September 21 to February 22 head and shoulders top. Now, before we get all too carried away, we have been up here before, back in late April, and the market peaked just over the lesser 61.8% Fibonacci line at 20.60.62 before dropping back down. Hence it pays to be cautious. However, it's also worth remembering that we now have two consecutive closes over the following: the long moving average, the neckline, the medium moving average, currently 20.22.85, the rising short medium moving average, currently 20.00.55. The late April downtrend currently 20.07.40 and the upper time currently 20.04.05. The downtrend will be retired after this commentary. I will keep the broken bearish Andrews pitchfork because I think it ties in with a new pattern indicator I've drawn, a shallower bearish shift pitchfork for the same move as the Andrews. These two have had crossovers recently on Friday the 3rd of June, and you can see it circled on the bottom of the bottom part of my daily chart in red. This ties in with what I know of such crossovers. So on or soon after a crossover, you will have one or more of the following: volatility, change in trend, or a reinforcement of an existing trend. In this case, it was a change in trend. The next crossover, also circled in red, was last Friday, the 10th of June. That day we had volatility and a reinforcement of a trend. Prices are now close to the upper time, currently at 20.7665 of the bearish shift pitch hook, and it'll be interesting to see what happens there. So far, indecision. So far today, indecision. Either side of the interesting 61.8% Fibonacci line, though we have started to move back down again. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Tofpik and ADM Investor Services International Limited. Here comes the final bit.